Hello, this is Derek, and the month of July is over, and now we move to the month of August. And this is the time frame in which I've been feeling for a long time, when all of this stuff is really going to get into play as far as the dollar crisis information. I'm going to go through a bunch of economic information in this. Now, there really won't be any links in the more. This is just some notes in which I've been writing over the last few hours. So first off, the US dollar closed on Friday at 78.29. And I have been coming on here for a while mentioning that the big thing about the economic crisis is that of the dollar. It's not the stock market. Yes, the stock market is part of the economy, but the reason why we're going to have the depressionary times for a lot of people and the economic hardship is going to be because of the fiat dollar. And with the technical indicators that ended the week and month of July, then it's not going to be pretty, at least the chances of which, looking at Monday morning and into the first week of August, is really going to be some bad news for the economy, if you will. Now, what I've been saying on here for the last month or so is that the US dollar index is looking very comparable to the way the broad markets looked a little less than a year ago, when the stock market found a bottom on the 15th of July, couldn't make much of a rally, raised for a little bit, and then when it broke support, boom. That's pretty much exactly what the dollar has done, and it just broke that level of support. And usually when you break levels of support, especially the way that the charts have been showing, that can mean further downside to the situation. So it doesn't mean that it's going to be just like it was last year, where we have a couple weeks of some negative economic stuff and then a big crash, which is the way it played out last year. It just means that a big stage as far as the dollar collapse is got a good chance, or a decent chance, of happening this week, and an amazing chance of happening in the month of August. Now, gold had a big week, or big Friday, silver, commodities, and I expect that to continue on as we move forward. There's a lot of bullish patterns that are forming on the price of gold. I mean, you can say, well, gold has been manipulated down, and it has been, but at the same point, what does this mean as far as price action? Because it's only price that pays. When you see gold trading at, say, $960, maybe you can't buy an ounce of gold for less than $1,100. But when it's $1,200, maybe you can't buy an ounce of gold for $1,300. And when you manipulate the market down, at some point you're going to have to lose grip. The way that I think of this as an easy comparison is, imagine you got a very strong force trying to push something down that's moving forward with like a gravity type thing. So it's got two things at strength. Now, if the thing that's pushing it down is trying to fight gravity, at some point it's going to have to lose its grip. And when that happens, that can usually create big moves. And that's why I would not be surprised to see $50, $60 days on gold, 150-point weeks, $300 months, $200 months. These things are all expected based on that type of theory. If they lose that grip, they're trying to push something down that's fighting against it, they lose grip, gold will explode higher, the dollar will fall really big. Now, I don't know exactly how long we got before gold will reach that 1,200-1,300 barrier. I expected July and August to be that breakout month, pretty much around the start of the year, and it's looking as if that is going to be the case for it. Another big thing about 2008 is when people, like the everyday people, were looking at the economic conditions, watching CNBC and the local news, they would say, well, the Dow was down 150 today, or Dow was up 70, and they would consistently see the stock market fall. Okay, 13,000, 12,000, 11, 10, 9, 8,000. That caused a little bit of a panic. But it's a little different this time now because people are still looking at the stock market. They've seen these massive gains that it has had, but a lot of people are still not seeing that dollar collapse. So when we had the collapse happen last year in September and October, people were seeing the charts. The same won't be true for the dollar because only a certain amount of people will be looking at the dollar charts. And that's why this type of collapse could come with a much bigger surprise and therefore could create a much bigger impact when this all happens to come into play. So, like I say, you still got time to prepare, but as every day and every week passes, the amount of time that is left goes down lower, as the next stage will mean that the assets in which you want to buy will most likely have a little bit of a higher premium, 20, 30, 40% maybe, as the prices of commodities will most likely start to go higher. And they're saying that with all of this stuff that there's going to be recovery. They've been saying recovery for what seems to be months now. And they're at the point where they're talking about a jobless recovery. Like, does this, I am still boggled, so boggled completely how people don't get it. I mean, how is this possible? You got new people who had decent jobs before, $14 an hour, $20 an hour, heck, even $10 an hour for a lot of people is enough to be able to pay the bills and have a decent, okay living, depending on, of course, where you live and who else makes money in the family. But these people are losing their jobs and going on unemployment, which they will get a significant less amount of dollars. And then you're going to have people who were on unemployment for 9, 10, 11, 12 months. They're going to lose out. So now they go from having something to nothing. And how does this spell recovery? Especially when the majority of the new jobs pay so much less than the jobs that we have that are leaving. There is nothing when you look at the macroeconomics that states that it could be possible. So it's not like it's funny anymore that they're saying it, but it's sick because so many people are believing what the TV is saying, and it's just getting pretty bad. The GDP numbers, they came out on Friday, better than expected. And I was watching a vlog by Carl Denninger, and he brought up an amazing point that the GDP numbers in which they are telling you, just like the unemployment rate, have been manipulated so they sound better than they actually are. Meaning, I think it was down about 1%, where it sounds like it should be down like 3%. So, with that being said, there really isn't improvement. But even then, even though they say, well, economists expected it to be much worse than what it actually was, so that's a good thing. That's a sign of recovery. And there's two big points to talk about when they talk so much about this better than expected, all these better than expected earnings that we've had. Because the first thing is this: if you're expecting to lose, say you're expecting to lose 500,000 jobs and you lose 400,000, that's not a good thing as far as the way they want the economy to work, because there's still a significant amount of losses. I mean, just go back to like the Super Bowl of last year, and anyone who watches football or watches Super Bowls can understand this. Who was the team that did the best? Who was the dominating team? Was it the Cardinals or was it the Steelers? Well, if we would analyze it the way markets analyze it, the Cardinals were the best team because they did better than expected. They were only expected to lose by 6.5 points. They only lost by 4. So they were better. The Steelers worse than expected. So there's a lot of problems in the way they do it. Also, when you're looking at all this better than expected stuff, you've seen all of these earnings and the majority of them were better than expected. To me, it's not a matter as if things are doing fine with the companies. It's the people who decide what they expect are doing a poor job because they haven't expected results too well. And of course, it's not that they're doing a poor job. It's because, well, they do stuff behind the scenes. They're like, okay, well, we're going to have about a loss of, say, 3 cents a share. So let's say we're going to expect a loss of 4.8. This way we can at least make investors make things sound better. That's at least the kind of gist in which I get from it. I also I talked a bit about Carl Denninger just a bit. I seen him on CNBC recently, and Dennis Neal, he has been really getting under my skin the way that he's been talking about the recovery. But the biggest thing is how he's basically put down all of the people whom I've been trying to help, including Carl and Peter Schiff, as it's getting to the point where it's not funny. It's just getting pretty sad in my opinion. The stock market, it's up to well over 9,000 points. We've seen a gain from the mid 6,000s to the early 9,000s. And I mean, they're saying stocks are the way to go. I've said it many times before. I'm going to say it very quickly here. It's printed, inflated money. It seems as if the stock market is an indication of inflation. But a pullback has to happen. It's a matter of when and not if. Because you cannot go from 6,500, break a very major resistance level at both 8,000 and 8,400, get to 9,200 and not at least expect to test that $8,000 level. Whether it would test it in this month or test it later on in a technical issue is whenever, but a major test of 800 is like almost guaranteed. Now, if that doesn't happen, the only scenario I can point out is that this major inflation that we're going through will just get much out of control over the next little while. Commodities should skyrocket, and of course, as I've said in the earlier video, if the stocks go way high, the regular people are going to be pulling out, which actually would force the banks to pull out also. Okay, moving on now. Exit strategy. Now, you've probably heard about the Federal Reserve, Ben Bernanke, talking about an exit strategy. I think it's very important, at least my opinion, I think it's very important for people, like everyday people, to have your own exit strategy as far as dollars. That means when you get out of the dollar, I mean, you can't completely get out of it all at once. I mean, it's almost impossible, but when we're talking about holding stocks, holding equities, when do you plan on cashing out your stocks? I mean, literally, you don't plan on holding it for 3 or 4 years, do you? Because I find that very foolish myself. At least, if you put a small amount of your assets in for protection, that's different. But if you're relying on your investments and you're planning on holding for a long period of time, to me, that's just not smart investing as far as the way I see things. There has been Webbot projects predicting that as we get into the end of this year and into next year, getting your money from the banks isn't going to be as pleasurable as you think, as in, well, you're guaranteed your money as far as nominal, that's concerned, but I mean, bank holidays are always an issue. I mean, there could be days where your bank card doesn't work. Even the solar flares itself supports that the bank cards could stop working. But of course, a manipulative system could support that also, which I'm just saying, whatever it works out as far as people who hold on to dollars later on, it's going to be unpleasurable to take it out. Whatever unpleasurable it happens to be, I don't know. Now, high frequency trading, I haven't talked too much about. I mean, this is just another thing in which the people behind the scenes, especially I guess Goldman Sachs, are able to see the trades in advance. And basically what it is, it's like taking a penny from every bank account, but instead it's taking a penny from, or a half a penny from every share someone trades. And quite frankly, that's, to me, I think is completely unfair and completely sick, if you will. It's sort of like, say you're buying SPY fund at 96.10, you see it, but what they're going to do is make it so that you buy it at 96.11. That's what I think. Same thing as if you try to sell it at 96.11, they'll try to get you down a little bit. And they're just cashing in so much on this. It's a supercomputer trading without any human making the decision. It's sort of like in poker, having a bot playing poker, which just happens to be illegal on poker sites, but apparently it's not illegal here. Just to finish off now, some news for next week. The auto sales is on Monday. We'll see if anything about the cash for clunkers has anything to do with good results on it. You never know. On Tuesday, we got personal income and spending along with pending home sales. And then the end of the next week, we got the unemployment information that will be coming towards us. And that's going to be some very big information. I'd also like to point out that on my blog, I will be putting a big detailed video as far as investing is concerned. Both not only investing in stocks and options, but investing strategies as far as real assets are concerned. This will be shown over YouTube over about a 2 to 3 week interval, with the exception of the short-term trading videos. The full video will be available on Sunday on the blog. That will be to those whom have made a donation for the ebook, which will also be available for free later on into the month of August. So that will give strategies as far as options are concerned, stocks are concerned, more on the exit strategy for getting out, along with strategies for the real assets. That's the one that I can't stress enough. That will be the one that will come out for free first. So every few days I'll put like a 6 or 7 minute clip of this. I'm guessing it's going to be about a 50 or 60 minute clip. So thank you all for your comments, your ratings, and your subscriptions, and have yourself a magnificent day, everyone. Bye-bye.